Greetings, how you guys are doing? So, what I want to bring to you guys' attention, right, is some of you do not understand, right, correlation. So, I'm going to break down a little bit about correlation. Correlation is basically, guys, it's two pairs that actually works together. All right, so some of you guys are so used to just seeing candles, right? And that's fine. You're used to seeing candles up and down, and so it can look like it's Chinese or whatever you guys want to call it. It can look confusing to you. All right. Now, I'm no financial advisor. By all means, do your own research. Just giving you guys information based off of what I've studied, based off of what I've been able to understand when it comes to these markets, and understand exactly what does good for me. All right. So this is how I've been able to make my money. And so I understand correlations. All right. Some of you guys don't understand some pairs work together. So let's first go into understanding that the market does one thing. Okay. Well, I take that back. The market does three different things. You have the market going up, the market comes down, right? And then it goes sideways. That's it. It's just your job to find out what the market is doing next. All right. So the market can be driving up, giving you higher highs, right? Or the market can be dropping down and giving you lower lows, right? So it's based off of what you can pay attention to based off the past, right? And what the market done previous. And of course, you have to understand fundamentals, right? Or the market can just simply just be going into what they call consolidation, which means the market is not really going up or down. It's not going into a bullish or bearish. It's just stuck in one stagnant spot, right? So a lot of you guys look at this like as if it's difficult, and it's really just a bunch of emotions. It's emotions that's going up where people are saying, you know what, we're going to buy. You got some people that are saying, no, we're going to sell. And then you got some people saying, we're not going to do anything. We're just going to wait, right? So one thing that you have to understand, guys, is that let's just say you decided to buy the euro against the US dollar. All right. So you buy the euro against the US dollar. And then for some of you who like to pair hop, right, because we have some of those people that like to pair hop, you guys will go and buy the euro against the US dollar. And then you'll go and sell the Great Britain pound against the US dollar, not knowing that the euro and the Great Britain, they're a coalition, right? The euro against the US and the Great Britain against the US, they're coalition pairs. So when you go long for one pair and then go short for the other pair, you're working against yourself. And you got to understand that when you do that, you're setting yourself up for failure. Just like some of you guys will go and purchase the Australian dollar, right? And then you'll go and purchase the Australian dollar against the US dollar. And then you'll also go and sell the New Zealand dollar against the US dollar. You are working against yourself, right? That is a very, very bad way to start trading. Stop working against yourself. Understand that you need to understand, right, that pairs work together. So what you guys should be doing is looking up correlation pairs. Look up the pairs that work together so that you're not buying and selling against these pairs and not working against yourself. You know, the Australian dollar does when gold, like prime example, another one, when gold goes down, the Australian dollar is going to do some changing, right? So the Australian dollar, you can just about rest assured that the Australian dollar is going to drop when gold is dropping. When gold is doing pretty good, Australian dollar is going to be doing good, which means these pairs move in different time frames, but they got so much similarity to them that they're working their correlation together. So you guys want to understand what correlations is, the positive correlations and the negative correlations, right? So understand what pairs don't work together. You know, you got to understand, like even with the U.S. against the Canadian dollar, you know, when it comes to oil prices, right? Those are negative correlations. Canada is a major, first and foremost, Canada is major with oil export, right? So when it comes down to the Canadian dollar, what you have to understand is that the US dollar, right? Those two pairs does not go together. So that is a negative correlation, right? And so if you guys want to learn more about these pairs and understand the correlation of the positive correlation and the negative correlations, guys, just stay tuned. Like, subscribe, comment, and just stay tuned. I'm going to be breaking these things down to you guys. I'm going to be giving you guys the information that you need. All right. Understand that the market is just full of emotions. That's it, guys. It's full of emotions. Understand how to get out of your emotions. That way you can trade properly and be a very profitable trader, right? By getting your emotions out of it and watching everybody else's emotions play a part. And so when people are emotional about the market, you make sure you're not emotional. And when you're not emotional, you're going to win. We'll see you at the top because the bottom is just too crowded. We out.